Alrighty, guys, here we go. We are going to be working on problem 93. That is on page 343 of your book. And you need to make sure that you download the spreadsheet so that you can work it with me, okay? So this is what you're supposed to do. Read what's going on. Now, one of the things it says that we're supposed to journalize the transactions, record the accounts receivable, and then we're supposed to prepare the accounts receivable for the end of February, okay? Um, Now, he says that he owns a Payne sneaker shop. Balances as of March 1st are provided for the accounts receivable and general ledger accounts as follows. Okay, so Durant has 250, Lynam has 550, Pry has 800, Zamara has 550, cash is 15,500, accounts receivable is 2,150, sneaker rack equipment is 1,150. The capital that he has for Payne is $3,500. Sales, of course, are $2,100. Um, and it says to be sure to put beginning balances in your papers. Then we're going to be doing the following transactions that occurred in March. Okay, so this is what you've got to do. Now, notice, like for example, when it says Durant 250 DR, that means debit. Okay, you're supposed to put it on the debit side. So when we're looking here, we're going to be doing the AR subsidiary ledger, okay, because that's the way it's coming up. So this is the accounts receivable subsidiary ledger. Remember what we went through, where you have one controlling account and then you have the individual accounts. So when they start, they're saying that Durant has $250. So notice, March 1st, you're starting March 1st. This is the balance that has been carried over from February. So you're actually going to be putting this information in, okay? For Ron Lynam, it's, or Lanham, whichever, it's 550. For Penny Pry, it's $800, okay? For Zamara or Zamara, it's $550, okay? That's for the accounts receivable, the subsidiary ledger. Then for the ledger, you have to put this information in as well, which is for the March balances. Again, for cash, it's 15,500. The accounts receivable, the sneaker rack equipment, the Jared Payne capital that he started out with. Notice it's a general ledger too because you have more accounts. You have the sales that you carried over from, as far as the balance, which you have for March 1st. Then you have your sales discount and your returns and allowance. Now, these are zero because these are ones that we actually close out. The ones that are balances, like these other ledgers that are here, we carry them over once we close out and we do all the transactions and we bring them over with balances from February. Okay, so this is what you're going to see here, and this is what you're going to need to do. Okay, so put all that information in, then we're going to start with the transactions. Okay, so you can pause this and enter all of that information, and then you can restart it again, and you'll see that I'm starting up again as well. Okay, so here we go. For the March the 1st, it says that he paid Jared Payne. Okay, so as I was saying, on March the 1st, he added, Payne invested an additional, notice again, it says an additional amount, okay? We already have a balance there, so we're going to be putting the additional amount. So this is the general journal, and remember, the general journal is of every daily occurrence that is happening. Once we post to the general journal, okay, then we post to the general, the ledgers, okay? I know, we went ahead and we did payroll for about 2 weeks, so now we're coming back to the accounting portion of it, okay, for sales. So he decided to add more money. So you're going to debit cash and you're going to credit his capital, okay? And then once you do that, okay, you're going to see that in your general ledger account where you're crediting cash right here. Notice you have your amount that you started with. Then on this day, you debit. And then this is your running balance. This is where you're adding the funds. Okay. This is where you're adding the funds and you're bringing it in so that you know exactly how much money is coming in. All right. Then notice that we also went ahead and credited our capital. So we're putting it in here. And now the balance is that he's actually put in is the 45, well, his balance is 45,500 because he just added an additional $10,500. Okay. Remember how we were doing that? Well, we're going to be doing it again. Now, here's where we have the first one where it says sold, sorry, General Journal 1. Sold $700 of merchandise on account to B. Durant sales ticket number 50. Notice the terms. The terms are 4 and 10, meaning that if he pays in 4 days, it's 4%, 4% discount if he pays in 10 days. If not, then it's due in 30 days, the total amount. But we're putting this on account. So this is what we're doing. We're going to go ahead and debit his account and credit sales because this is revenue. Okay, so here we go. So we find the AR schedule for Durant. Here is the $700, right? Remember, he had a balance of $250 before. So now 700 plus 250, that's where we get the 950. Okay, so we added to his individual account. However, we're not done. We also have to go ahead and make sure that we added to the balance of the actual accounts receivable controlling account. So here we go, $700 that we put in, that we debit. The debit before, or the balance, was $2,150. So we add that to our running balance, and you end up with $2,258. Now, yes, I put in the others that are here, okay? But this is just showing what you've got to do. So now that we put it into both the subsidiary ledger and the ledger, you now need to do what? We need to make sure that we credit not cash, but our sales right here. So here we go. We're putting in the credit of the sales. So now we're showing how much revenue we're bringing in. Okay? That's what we're doing. And again, if you need to, just play back so that you can see what I did. Now on the next one, let's go back to our journal. The next one, here we go. Accounts receivable, another sales, but on line item. Okay? So here, we're actually going ahead and we're showing on our general journal. And remember, once we finish the general journal, you can do the entire general journal and then transfer over to the general ledger site. I'm just showing you what you've got to do for each one of these. So here we go. On the 4th, $500, sale ticket number 51. And again, we're crediting sales. So you can either do it the other way. You can go to the ledger and put the $500 into the account, the controlling account first, add it. So you have your new running balance, and then go to your subsidiary ledger and put it in for line item, okay? And then once you're done with that, of course, you need to make sure that you're going to do what? You can make sure that you credit your sales as well, and that you bring down, again, your new running balance, okay? So that's what you're doing there. Now, line item, okay, here we go. We're selling again, so that's basically the same thing that you're going to do. Now, I want to show you on this one that says that we received cash on the 10th, okay? Let's go to General Journal. This is a Amaro that happened on the 9th. That's basically the same way that you did these three. But this is where we now have a sales discount, okay? We receive cash. Notice what it's saying. We receive cash from Durant in payment on March 3rd transaction. Sales ticket number 50, less discount. Okay, so here we go on Durant. So it's the 3rd. It's now the 10th. Okay, so 10, 3, 4, 5, 6, 7, 8, 9, 10. He paid in 7 days, not in 10 days. So he gets a 4% discount of what happened on March the 3rd. So 4% of the $700 ends up being what? What does that end up being? Okay, what are we doing here? Hold on. What we're doing here is we see it right here. Okay, we see that his amount when he first bought this on account was $700. It's right here and it's also in his ledger. Okay, so now what we're going to do is we're going to show then here in the general journal that we're taking the 4%, which 4% of 700 is $28. So we're taking then $6,072 and we're taking that in for cash. Then we're going to go ahead and debit also the sales discount. Then we're going to credit his account for the entire $700. Why? Why aren't we getting those $28? Because remember, we said that if he paid in 10 days, we would give him a 4% discount. So this is how we do that. This is how you put the ledger in. Then this is how you go ahead and make sure that you're actually putting it into the actual ledger. So we go to ledger 1, cash. Here we go. $672. So we now add that $672 to our running balance. Then we go ahead and we find our sales discount, which is here in ledger 2, and you debit that as well. What you're doing is you're showing how much money you're taking off of the actual. This is a contra account, remember. What we're doing is we're going ahead and we're showing where those $28 went for that one person. And notice it's in general ledger 2, okay, of what we're doing here. Or general ledger 1, actually. But anyway, what we're doing is we're recording it. So then once we record that, we go back to your ledger, and we also need to make sure that we're crediting the entire $700 because we gave him the discount, but we're still having to go ahead and show that we are going to credit the discount here. Okay, we're crediting the discount, $700, bringing down the amount of money that we have in accounts receivable, bringing the $35.50 down from the $700. Okay, remember these we journalized and we put them in. I just didn't do the one for the 200, but here we're showing that we're crediting it now, bringing this down, showing that we have gotten a payment in. We also have to make sure that we credit Durant the total $700 because again, remember we gave him a discount. So his balance goes back to owing us $250. Okay, if you need to, go back and play this again so you can understand it. Okay, the others that we have here are general journals where we purchase items. We should remember how to do that. Where we receive cash from Linum. Okay, again, so we're going to show how we're going to take that into cash, and now we're going to credit his account. So again, we go in and we show it here where Linum gave us the money, cash, reducing his balance to $550 in his individual area, then making sure that we're putting it into our ledger as well, where we're taking it out and showing where we've gotten it. Okay, and then of course, making sure that again that we place it into um, cash where we receive that money, debiting cash, getting that money there. Okay? And like I said, here's the accounts receivable. Okay? On the 22nd, where remember we went ahead and we had another transaction that was the same. But here's the 22nd where we received that money, and now we're reducing that amount, the $5,850 by the $500. Okay? Again, if you need to, move it back. Okay? Now on the 23rd, General Journal 2, on the 23rd, we actually went ahead and took $3,400 in, and we're just collecting that cash sales, and we're just debiting the cash account and the sales account. No big deal. This is our first return and allowance, right? So notice what it says, that what happened on the 24th. Issued a credit memorandum to Penny Fry for $2,000 of merchandise returned. So that was $2,000 of stuff that was returned, okay? On March 20th, when she purchased the sales on the account, okay? She purchased money, okay? Notice this should have been $3,000. Let me fix that right now. Okay, hold on. Okay, fixed it. And yes, that's why I tell you that you guys have to check your amounts and your zeros to ensure that you've gotten it correctly. And yes, I make mistakes as well. Voila. What a shocker. Anyway, so on the 20th. So this is how we're going to go ahead and do that. So we're going to journalize it. Then we're going to say that we're going to debit the sales and allowances, and we're going to credit her account. So let's go there. So we're going to go to ledger number 2, sales returns and allowances. This is where it's at. We're going to debit it, and we're going to keep this balance. Now we're going to go back to her account, and notice where we had the $3,000. We're now going to credit it for $2,000 because she gave those merchandise back. So we're going to decrease her account by the $2,000, going ahead and showing us the $1,800 that are here. We're not done. We have to do the same thing to the ledger. So here we have to credit the $2,000 as well to ensure that we're keeping a correct tabs on the total account receivable that we're owing, plus the individual accounts, and plus again to the sales and the sales and allowances, so that we know what happened to the $2,000. So if we're ever audited, or if you happen to forget, it's all there. It has been documented as to where that either merchandise is or the cash is. Okay, so then received cash on the 26th from, back here, received cash from Penny. Okay, now we received on March 20th, okay, ticket number 53, and of course it says don't forget about the credit memo. So if we go back, okay, to when we went ahead and she purchased stuff on the 20th, right here, okay, there is a amount of money, amount of discount that we're going to give her, right? And we said that we were going to go ahead and give her again. If she paid in 10 days, we would give her the 4% of the sales. But remember, we just credited her the $2,000. So you're not going to use 4% on the $3,000. You're now going to go ahead and look, and you're going to give her, right? $3,000 minus $2,000 is $1,000. So you're going to give her the credit of that, of the $1,000. And if you notice on the general journal, this is what we're doing. We're crediting her $40, or we're putting it into the sales discount because we're giving her 4% on $1,000 that she still owes us for that transaction. So 4% is now $960. So we debit the cash because that's how much money she's giving us. We debit the sales discount, and then we credit the sales for $1,000. Okay? Remember, we've got to put all this in. So we go into cash, our ledgers, cash, right here. Okay? So we add right here. So we add that money in. Then you go into your sales discount. You put in those $40. Okay? Now, we then have to go back, and what do we do on this ticket for sales ticket? Okay, so you go to her account and you credit her for the entire $1,000. Okay, so that now she only owes you $800, showing right here. And then you have to go into your regular ledger and show that we have taken that $1,000 and reduced the amount of money that people owe us by the $1,000 that is there. Okay, again, if you need to go back, go back. This is a long one, right? The last two, or the last ones, you're going to see where you received and collected your amount of money as far as your cash. There's another sold item, merchandise, sales ticket. We've got it there. And then now you're going to issue a credit memorandum for $500 to Ron Lynham as well. Okay, so, and we're going to finish this out. What you have to do afterwards, of course, is to, of course, generalize everything that is here, right? Generalize all the transactions. These are all the transactions that are done. This is all the transactions that were done up until the 31st. All of these have to be in the ledger with a running balance. Okay? Into ledger 2 also with a running balance. Into your literal accounts, each one with a running balance for each one, whichever one we did. Okay? Then we also have to go ahead and prepare what is called a schedule of the AR accounts. What the heck is that? That's very simple. That information is the totals at the end of the month of what people owe you in their individual accounts. So, like Durant owes you still the $250, you'll put it here. Lynham owes you the $33.55. Penny owes you the $800. Zamora goes ahead and owes you the $750, and your total amount in accounts receivable should be $51.55. So if we go here to your accounts receivable, $51.55. Hold on, I'm off. Okay, fixed it. I forgot that this was not 590 instead of, I went ahead and I looked at it as 590 instead of 595, which brings then this total down when I go ahead and I credit it to 51.55. My error. See, instructor makes errors as well. Shocker. So again, 51.55, and here you go. You go ahead and you have the same amount of money there. This is what you've got to do for this. I know it's long. I know it's drawn out. But the reason that I took my time with each frame or with each workbook in this entire each spreadsheet, this entire workbook, is so that you could look at what the balances are there, so that you could understand how to do the other one, which is going to be your problem B2. Again, if you have any questions, any concerns, don't hesitate to contact me. And I'll see you on the flip side.